Welcome back. Mphasis has gone through its troubled times in the last 5 years, but the Blackstone acquisition has fueled hopes of a turnaround. Will that take place? We've been in conversation with Ganesh Aiyyar, the CEO of Mphasis. The company, Ganesh, has gone through challenging times, largely on account of the big revenue decline that we saw in HP. But through it all, what has stayed constant, through even perhaps the multiple changes in promoters, has been the fact that the company continues to make a lot of acquisitions. It's been, 9-10 acquisitions since inception. Will that continue?
See, we are actually looking at acquisitions in the area of overlap between digital and governance, risk and compliance. That's an area of interest because we are doing well. We want to bring high science solution into those areas. We have already got a startup called Next Angles, which is working in that area. So we would continue to look for it. Once the cash strategy is defined, then we would be in a position to see what targets we want to go for. We prefer smaller acquisitions rather than a big one, and especially with somebody with IP rather than scale. Because the future of this game is not scale alone, it is actually specialization. So that's what we are going to go for.
But speaking about specialization, ever since you've taken over as the CEO of the company, there has been a lot of focus on hyper-specialization. You decided to focus on banking, capital markets, insurance, and now it contributes more than 50% to your overall revenues. Will there be a change in that?
Our strategy is dictated around an inch wide and a mile deep, which means specialization. With automation coming, Reema, generalist will fall by the wayside. That is the core belief. And if you want to move up the value chain, you have to understand customers' business. As a small company, we could afford to do it in one big vertical called BFSI. And that has been our focus. Will we add vertical? We actually take an annual look, should we add another vertical? But we won't do it at the dilution of our focus on BFSI. And there is significant headroom for us to be successful in BFSI.
So while focusing on BFSI, are you looking to add any verticals?
We evaluated a couple of industry verticals 2 years ago, last year.
And right now?
We will evaluate again.
But there's nothing on the horizon which looks...
Nothing immediate, nothing imminent. But we are open to adding one more vertical, not because we feel that BFSI is a problem statement, but because we think that we can spread our wings and be effective in another vertical. That should be the reason.
Fair enough, but speaking about BFSI, I was reading a recent report where they did an analysis of the expectations of the top Fortune 500 banking companies or finance companies in US and Europe for the Jan to March quarter, and they're expecting a 12% revenue decline year on year, a 30% decline in the Fortune 500 banking profits in this Q1 CY16 quarter, and they're saying that this perhaps could be the worst start to the year for the banking sector in US and Europe since 2008. You don't see too much specialization on banking. A little worrying at this current stage as things stand?
Not at all. Because our job is to make our customers successful. Whether they are in hyper growth mode or hyper, cost optimization phase, or both. So in 2008-2009, we grew 45% when the entire world was going through global financial crisis. Whenever a customer looks at optimizing cost, we have to be in tune with it. And we do have the ability to optimize costs for our customers. Only in select areas. I can't do it for all areas. So I'm not at all worried about the trend which we are seeing. And remember, what you are talking about does not capture their investment in digital. And it does not capture their investment in governance, risk and compliance. Governance, risk and compliance will continue to attract investment. And digital will have hyper focus in terms of investment. Traditional IT services will shrink, whereas digital will grow. Governance, risk and compliance will be very, very stable.
What percentage of your revenues currently come from digital, and how will it change, say, in the next 12 months?
So if I turn this question slightly, new generation services, new wins. Last year, 65% of my new wins came from these areas. Until Q3, 52% of my new wins came from these areas. So we are clearly winning in areas where customers are investing. And what will happen is this will translate into revenue. So revenue is a lag indicator. You will start seeing this flowing into our revenue. Last year, our revenue pattern was 34% was coming from new generation services. We expect it to grow much faster.
How much would it go up to?
I hope in next 3 years, significant portion of our revenue is from new generation services, which means majority of our revenue.
Okay, fair enough. But I'm assuming these new generation services come in at higher margins, right? Compared to legacy?
It's distinctly possible.
So your margins should improve in the next 3 years once new generation services contribute more than 50%
As I mentioned earlier, we are aspiring to improve our margin profile.
To what? Because industry is clearly at more than 20%, right?
No, so you know there are
Way
two
more.
camps. There are two camps, and you know this better than I do.
Yeah.
Tier 1 or based on size, which is 4 billion and above, operate in 20-25% range. Then you have sub billion or sub 2 billion. They operate in EBIT terms around 14 to 16%. We are still sub billion or sub 2 billion. So we hope to beat this profit pattern over a midterm period. And then will we reach 22%? I don't have a line of sight today.
But at least you should go up to 16%, which is the
That is our aspiration over the next 3 years, and we have plans aligned to it.
Speaking about uncertainty, how are you planning to maintain the client connect and make sure that the transition becomes smooth, whether it's to do with your clients or even to do with your employees?
That goes back to our culture. We actually leverage the fact that we are a smaller company. Because when you're a smaller company, you maintain that intensity, that touch with the customer. Because customer is everything to you. I want to retain that culture. Even this particular transaction, we wrote to 593 different individuals in our customer base.
Okay.
I wrote to 15 customers and I got reply from 14 of those. And the sentence, their reply started, "Congratulations, do let us know how can we help you."
And out of those 593 clients that you reached out to as a company, positive response came in from?
Literally, majority of response was tremendously positive, and some of the response was neutral. There was no negative response from our customer base.
We've spoken about a lot of opportunities that Blackstone as a promoter brings to your company. What about the risks? What perhaps will keep you awake at night?
So, nothing keeps me awake. I'll sleep all right. And
except work. Except a lot of work. Working 20
when you
hours
start
a day.
enjoying work, that itself becomes life. So to that extent, I just love what I'm doing, working with my team and my customers. So the risk is, will I be able to transform myself to the new environment? The risk is whether my leadership would be able to transform itself to the new environment. We are not taking it lightly. We are working on our own personal change management. Last but not least, our success should be reflected in for our customers, our top talent, my leadership team, and our shareholders. So it will require me to take the entire community along in this successful journey. And that's why I'm hitting the road for the next 4 weeks, because communication is key to taking the entire community along. And I appreciate CNBC and you, Reema, personally reaching out, having this conversation, because I always enjoy such a conversation with you. You are well researched.
Thank you so much for that, and we appreciate you having us, talking to us. But just, one more question. Of late, we've seen a lot of deals in the IT space, whether it was Virtuoso acquiring Polaris or in HCL Tech acquiring Geometric, and now Blackstone acquiring your company. Is there any trend to it? Is there any particular reason that all the deals have just culminated now?
When the traditional markets start drying up, you tend to see a lot more consolidation.
So we'll see more of it?
I personally think you will see more of it. Not only that, over the next 5 years, some big trees may fall, because that's what happens when there is a major transformation in the market. So all of us have to be alert. I'm not wishing them that they should fall, but it is important for all of us, including me personally, not to take it for granted. And be ready for the future. Don't live in the glory of the past. Embrace change.
So is Indian IT ready for the digital transformation, or not all companies?
No industry is ever completely ready. And we have seen many trees fall in different industries. We are not immune to it, and we just need to be alert and be prepared to transform right from the board, the CEO, down to the last person who is serving the client. We cannot take this lightly. There is no moment where we should become complacent.
Thank you, Ganesh, for taking the time out and speaking to CNBC TV 18. I'm sure Mphasis will ride through all this transformational phase in the Indian IT sector and come out right on top, and perhaps one day will soon be in the top quadrant of the Indian IT industry, as you predicted and hope. Thanks once again for your time.
Thank you so much, Reema.